Russia's interest rate is now among the world's highest. Just to compare them to other countries, big rates, Brazil's rate is now at 11.75%. India and Indonesia are around 8 and 7.75. In China, they actually dropped to 5.6% last month. Now, the U.S. remains one of the lowest at 0.25%, almost zero. But that may change soon. The Federal Reserve is expected to raise rates possibly this Wednesday. Now, for more on the Russian economy, I'm joined by Kim Iskyan. He's the emerging markets analyst for Stansberry Research. Good to see you again. Last time you were here is before things got a little bit more wild here in Russia, and things are different now, noticeably so than just a few months ago. We're talking about the potential, and I want to focus on this, the potential collapse of what we're watching right now in Russia, which is the economy. Why should not just America care, but why should the world care?
Well, what we've seen in the past, Phil, is that when Russia catches a cold, first a lot of the region gets very sick. I'm talking about Central Asia, the Caucasus, and certainly Eastern Europe. And then we can't forget that the European Union is very much connected with the Russian economy. And we've already seen a lot of weakness in Germany. I think we're going to see more of that. I'd be surprised if the Russian economy doesn't contract by at least 5% next year.
And this is a big deal because the last couple of times we had a little currency crisis, so to speak, it was not good. There was panic. Markets sold off steeply. It wasn't just a mild thing that just went away in a very short term. And I guess the reason I'm asking that is this any different than the other 2 or 3 times that we've seen this happen in history?
No, this isn't any different. If anything, this is going to be worse because Russia now, it's a bigger player. In 1998, when Russia had its first kind of major crisis on the international stage, Russia was a lot smaller. It's the size of its economy, its relevance to the global economy, its integration with the global economy. And now it's much more a part of the rest of the world.
And of course, the central bank has taken steps. They've tried to calm the crisis down, if you will, by raising interest rates. All these moves they're trying to make to save the currency, to save the economy. Do you think it will work?
It'll work eventually. I think they have a lot more to do. What they did by raising interest rates, it was kind of like breaking down a dam to put out a forest fire, and it didn't work. I think that at this point, there's little choice the central bank will have than to impose capital controls to make it impossible or at least much more difficult.
If they do that, that's very serious. What would happen next, in your opinion?
What would happen next is that the ruble will inevitably strengthen, and Russia will take a step toward cutting itself off from the rest of the world financially and economically. Investors will flee. It'll be a disaster for a lot of the Russian economy.
How likely is that to happen next year?
I think I would be surprised at this point if it doesn't happen.
Okay. Now, for our audience around the world, I mean, obviously we have an audience in China, we have an audience in the Americas, I mean, all over the world, and you think about who's most impacted. If, let's not use the word collapse, let's say a drop-off in economic activity. Who's most impacted by that?
Well, who's first most impacted, obviously, we're talking about Russia. We're talking about the region that's going to suffer from lower remittances. It's going to suffer from lower economic activity in Russia.
I mean, I'm assuming Ukraine is
certainly one of those places, exactly. Then I would really, if we're talking about economic impact, I would certainly look at Europe as being the most exposed, and then China would probably be further down the list. From an investment perspective, any sort of investor in emerging markets is going to feel the blast of cold air.
So the headlines read, in part because of the sanctions over the actions in Ukraine. That's partly why the Russian economy is facing this situation. But oil is also a very big part of it as well. And I'm wondering how big of a role has the lower oil prices been on the Russian economy?
Phil, I'd flip that around. This is first and foremost about oil. It's about Russia's structural reliance on oil. This has been the case for decades. The sanctions by the West on Russia exacerbated that, but that's really just been kind of secondary in a lot of ways. It's made it worse.
Well, I mean, we certainly appreciate you trying to clarify the headlines. And I guess for our audience, you think about next year, you think about 2015, I mean, what worries you the most? I mean, the scenario you laid out, is that the worst case scenario?
I think what worries me is that the Russian economy does shrink by more than 5%, by 10%. That could easily happen. Then the ripple effect of that is that you have Europe contracting, and then we can see the entire continent slip back into recession. And from an investment perspective, as long as Russia is unstable, as long as there's so much uncertainty, other markets around the world are going to be unstable and volatile.
It does not bode well. I was hoping for some better news from you, but
sorry.
that's the way we go. Kim Iskyan, thank you very much for your analysis,
Thanks, Phil.
working through the headlines. Stansberry Research, thank you.